Hi, everyone. My name is Anne-Marie Band. Today is February the 27th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We had news out of Japan. Their CPI is still a little bit hot. People are thinking, hey, this is going to make Japan step back from its very accommodative interest rate space, and that is bringing more strength into Japan. And so we shall see what goes on there. And I think that's probably the reason I'm bringing that is currency news always is very important to me. We just had, what did we just have? Durable goods just came out and, not really moving the market very much. Case-Shiller Home Price Index will be up in just about 25 minutes, as well as the FHFA House Price Index. I have no idea what that's going to do. But 10 o'clock, we're going to have a consumer confidence number that certainly will jiggle the market around. And as the 5-year note did yesterday, we've got a 7-year note that would jiggle the market around. Notice it just we had this one swipe of a candlestick that probably took out a bunch of positions, and then the market kept moving in its general direction. And essentially that's probably what we're going to see. I suspect things stay a little bit sideways into Thursday. This, I think, is probably pretty interesting, as well as the PMI and the ISM on Friday. So those sorts of things, very, very interesting to me, thinking that we will be sideways into those numbers. And in general, really, until the Fed meets again to decide the interest rates. Now, I am hopeful that we bounce off the range here. And remember my storyboard, for those of you who've been listening to me for quite a while, remember, look at the 2 to 3 candles to the left to figure out what price action is doing. And now we've added these volatility bands, and notice 8 to 8:30, this is that durable goods spike, came all the way into the bottom of the volatility band. But here's the more important thing, right? Price will give you your entry, and then the vol band will say, you know what, that's not a bad idea. Okay? And so here we are, bullish overall. We got a little bit of a drift. So if we do take a bounce, we need to cover at the top of the bands. All right? So this is the volatility space that we're looking at. Probably 505 all the way up maybe to 508, 509. A little bit sideways. Could have a little bit of a drag to the south. All right? But that is what we are looking at in general. Here are the cues. I know it drives some of you crazy that I don't give you these in the same order every day, but, I like mixing it up. Whatever. So what are we doing here? We're above the close of that prior day, 436, still giving us a very nice bounce zone. Look at how many days. 1, 2, 3, and 4. A lot of days sitting sideways here, 436 to 439, support and resistance. Why is the dip down into the low volatility band a nice price? Because prior support was there. And that's really what we want to think about. Okay, we use the volatility bands combined with price to make decisions. And I notice a lot of us are really just trying to use the bands alone to tell us whether something's going to work or not. And that is really going to give your chart, your trading trouble, right? You must focus on price first and let the volatility bands confirm what it is that you're thinking in general. All right. Let's take a look at the IWM. I did not update the IWM, but I want us to take a peek. Look at how it's rounding out. Let's go 4-hour chart, right? This is neutral to bullish, right? And they are still lifting a lot of small caps, a lot of people trying to rotate into the small caps. Biotech had a really big day yesterday. Which one do they use? XPI, right? Really big day yesterday. And as I mentioned, regional banks and biotech are the majority of what's going on in the IWM. That being said, February is biotech conference month for the year. More biotech does more biotech conferences in February than any other time. And my suspicion is that, we've got ourselves a bounce into some heavy congestion, because if rates don't come down, these guys who borrow a ton of money are going to be sitting in a space that they don't love. So keep that in the back of your mind. All right. Here is the ES. Have a look. We're a little sideways. We're drifting down into this area, right? But again, dips have been bought. Dips have been bought into resistance yesterday, but nevertheless, this is what we're seeing. And so we've got a buy the bounce formation under negative divergence from a momentum perspective. And so that tells us when we buy the bounce, we need to take profit as we get to new highs. All right. I still suspect we could be in a megafold today. Do you see the expanding volatility bands? We could go all the way up here and then all the way back down. Look to the left for heavy congestion. That's going to be the 66 area, and it's also going to be the 77 area, but that's been pierced. As you can see, it pierced into, say, 70, 71. And so you want to be super careful there. Let the dips confirm that you've got buying, or you've got to be quick snap in and out in a very, very swift formation. All right. Because we've got a cross current showing. Taking a look at the same sort of thing. This 18,000 number, kind of big. This is yesterday's VWAP test at the end of the day. They bounced above it and now fading. The dips are still buys. Notice also negative divergence here. That means when it bounces, you take profit. Now, it could also mean that you could take the short at the second volatility band or the third volatility band. But the key thing is price action must confirm. So you let price action do its thing. And if it breaks out, just so long as it pulls back and holds this 18,054, we're in great shape. My thought is it's going to be a choppy, messy formation today. It's just going to be flat out ugly. And you guys know what I love to trade when things are flat out ugly. All right, so here we are with oil. So Saudi Aramco just put some news out that said something about how many resources they have. I don't know why they would do that. Feels a little weird to me. Simply because, they want oil to be up, even though this is WTI. Notice what happened yesterday. See this 78? I've been talking about it ad nauseum, right? 78.50 to 78 resistance. Then here we go again. If it doesn't hold 78, it goes to 77.50. And then it goes to 77.10. These numbers have been here, I don't know, you go back 3 weeks and I still have that number there. So it's been a hot minute since that's not been the range. So what do I think? Well, here at the bottom of these bands, we have a tendency to see buying, but this VWAP is flat and the bands are expanding. So if the VWAP's flat and the bands are expanding, you can buy the dips and you can also sell the peaks. All right, that's what we're looking at. Hey, kind of long today. Just want to make sure you remember the mechanics using volatility bands. It's price first, right? You look at price, then you consider trend, then you consider momentum, and then you put all those pieces together. All right, it is still a buy the dip formation across the market, right? Just be careful. Don't get all excited trying to short things. We do have some sort of toppy thing in the future, but only time will tell the tale. Take care, and I'll see you on the platforms.